Great morning, traders. It's Austin. It is 8:26 a.m. Eastern. It's non-farm payroll day. Almost time for the non-farm nonsense to begin. And like we said yesterday in video, these sessions usually resolve in one of two ways. 9 or 10 times out of 12 yearly, you'll just get a big dead wedged all-day contraction in the pit sessions. 2 or 3 times out of 12 each year, you'll get a big trend day. And so, considering the stock markets are pretty much just wedged near the highs for the past 2, 3 sessions, there's a statistical probability they're going to expand today and run directionally. And I'm going to expect that. I'm going to anticipate it. I'm going to work towards that. If and when they prove that they are trendless and or chopping or wedging, then I'll back off. So, but I'm going to go into today with the approach that this one has trend potential, and I'm going to capture a good share of that if possible. So see what happens. Waiting for the 8:30 reaction as the bid-ask spread flares a mile wide in all symbols. 8:28, 8:29 Eastern as liquidity dries up and they just rip stops most of the time, and then price takes off somewhere. So it would be more like past 8:31, 8:32 that I would look for something to structure out and work with. So there may not be anything. We'll see. So just about there, 8:28. All right then. The first reaction is no reaction, sideways. I have my Russell filter chart in a 100% bullish bias. I don't have any buy signals on the trigger chart, so I have nothing. Sit, watch, and wait. Now that could change at any moment. I would be looking short somewhere in the 1171 area. And again, I don't have anything on the buy side, so for now I'm just looking at the potential of a short if they should turn bearish. As far as the bullish side, there's nothing for me to work with just this minute. So we're looking at, we could be short the 1171 area in a heartbeat. They could be trading 1180s in a heartbeat, and we sit, watch, and wait. So that's where we're at right now. 8:33. Okay, 9:05. We have the Russell went down. First of all, gave a pullback sell in the 72 zone, and then it went down through the 71 breakdown zone that we discussed earlier. So I have a position on each and there was slippage on one or both of them. I forget. I'd have to look and see where the confirms are. But anyways, I think well, regardless, so that's where it is on a blended entry, and we're holding into the pit session, which is, unless they collapse, which is still a ways away, about 25 minutes away until the opening bell. I'll take the risk off this one here shortly, but it's not like there's much going on. It's actually, one position is risk-free, and then the other is normal, 8 ticks. So that's we have basically the fill on 72 was at scratch, and the fill near 71. I think it was actually 71.9 or 71.8, something like that, is one position risk. So anyway, that's where we're at. See how it resolves. 9:06 Eastern. Okay, 9:07. Time to take the risk off. So we'll do that and let this one work. It has only gone 25 ticks or so. It hasn't really covered any distance. If it's going to move, it's got a lot further to go. So looking for at least 40 ticks blended here, which is just, standard position. So we can pick that up, then that's going to be the trade, 40 or better ticks. And if it goes 30-ish, and I say if because it could snap back up and hammer the stop before I'm done with the sentence. But if it goes 30 some ticks, then I will manage a partial. So we'll see. Right now it's just sitting in the tweener zone. It hasn't really done anything. 9:08. Okay, it's gone 30 ticks. So I'm going to lock in 16, and that's assuming there would be at least a tick slippage, because all week long there's been at least a tick slippage. The markets are very illiquid right now. That's why they're all wedge chopped. However, like we talked about actually yesterday, There's the potential for directional expansion today because they've been wedged up for so long. So I'm trying to do an equal balance of giving it the breathing room to expand, into one of those moves versus having it go 30-ish ticks and then giving it all back. So trades management is always subjective. But not always. I mean, you can make it black and white if you choose. The way I manage my trades is more subjective, with a set of guidelines. I have pre-measured objectives. In today's case, they're 5 miles below. Quite frankly, the objectives on this particular play here is like 80 ticks, 80 to 100 ticks away from where the first fill was, 72. So, they're pointing towards 64 initially, and then further from there. Moral of the story: I'm just going to balance this one with giving it enough breathing room versus not letting it take back everything if it continues to move. So that's the juggling act. It is 9/11. 9/13. It went 40 ticks, or darn near. I guess 39. I thought close enough to 40 ticks. So I'm at 21, and I'm going to leave it there. I'm going to leave this at 21 ticks. I'm blended, unless or until it goes past 50. If it goes past 50, then my first objective every single time is to lock into 50. And if I can do that, then that's always my first, quote, mechanical priority for myself personally with this particular symbol here, and quite frankly the same with crude oil. So there's 21, which I would call 20 locked in. If it snaps back and takes that out, that's fine, and then we'll see what comes next in the pit session. For sure there's more action to come, and if it continues lower than the 39 ticks blended that it's gone so far, that'll be great. Either way. 9/14. Okay, 9/15. The Russell spiked back up and took out that stop with a couple tick slippage. I think it slipped on one. I'd have to look, but that's the Russell. It's slippy. You try to fill 5 contracts at this time of the day, that's not going to happen consistently. So, and we know that. The Russell is a small contract symbol. Yeah, you can guarantee 1 or 2 fills about where you want to, and anything more than that can be an adventure. So done for now. It is 9:15. I'm going back to square one, back to one contract, back to the 8 tick initial, and then we will work our way through once the real session begins. So that was just a little bonus for today. But then again, it's a padding. Worst case scenario, if I give back like 30 ticks, if I get stopped out on say 4 consecutive trades entries at -8 ticks, and I would be done, and it'd be a scratch day. So can't really get hurt today. Worst case scenario, I'm going to finish it at par or scratch. No red. Best case scenario, it's going to be blacker than this. 9/16. All right. It is what is it? 9:34. We have a continuation sell lower in the Russell from around the 67.8 mark. I'm in at 67.6, and we're letting that one roll. There should be some decent downside distance. Like I said, there's downside potential today because, quite frankly, there hasn't been any in a long time. So anyway, giving this one a chance to move. The opening range is about that wide, as you can see. So there we are, just leaving this stop alone unless or until it works its way down a fair bit, and then go from there. If it takes it out, we'll reconvene. So the 233s are, he says, let me add those. I don't have them turned on for the moment. 5 miles lower. Well, I'd be out way before that, but it's pointing towards one or the other as 90% probable today, like it's 90% probable any given day. So we'll see. I'm going to take the risk off here. First I add, then I subtract just in case things go haywire in between. Never leave a position open without a stop in place, if at all possible. So risk is off, and no plans to add, just letting it go. First objective is 40 ticks, and then See what happens after that. It is 936. All right, let's try this again. 67.6 went out, slipped one tick, and then I had the same position, 67.5, that blew out for several ticks. And for a third time, I have the same confirm, and that one has worked about 30 ticks so far. So, and it's just whipping around. Meanwhile, crude oil took off parabolic. I don't know what went on there. Just shot straight up in the air. So that's that. This is 28 in favor. I'm going to go at least 10. All right, so it's gone about 30 or whatever in favor. It's gone however far that is in favor. And so I'm going to lock in 10 and then just keep marching it down because things are whippy here. Not trusting a straight line move. I don't know what created that. I'm not sure what created this. I'm just reacting to it. You know, welcome to the V-turn of liquid markets of 2014. Here they are. Who knows how long they're going to persist? That's what we have to work with, so you deal with it. I'm going here now. 21 ticks. That would put me at over 50 for the session. Like I said, they're whipping, and it's early, so first things first, lock in that 50 for the day if given the chance. Yeah, there it is. Okay. Well, we'll see how they flow from here. Oh, 9:44 Eastern. Okay, 9:55. Price has been whipping around too for a better scale. Go to 1 minute chart. This is what we're looking at so far. So I'm short on the way down on a pullback and a breakdown because I've got some room to work with today. Still at 52 ticks and maybe more here depending. Price is acting like there's an econ report coming out. So like we said in the preamble before we ever got started, 9 or 10 out of 12 non-farm payroll sessions per year are just kind of wedgy, congestive, choppy. But 2 or 3 out of 12 on average are trending, and when they do, they trend big. So that coupled with days worth of congestion here in stocks gives the potential for expansion. So I'm trying to balance managing things, to ride some of that potential without giving back, what I've worked as hard to achieve. So that's trading. There is no magic solution of how to manage things properly, perfectly, I should say. Nobody rings a bell during a trend move versus a sideways move. So all you can do is all you can do. It's 9:56. Okay, before I could even get started, try that one more time. In on the short side, the 1164 area, and the last 2 short attempts in this zone right here have been stopped for 1 tick in the pounding chop, and so I'm just going to concede any more downside for this moment. I can't hold a stop. They're just whip chopping them, as you can see, and maybe they're going to cave in. Quite likely going lower from here. That's the bias, but I can't hold a position where I want to, defending risk. So with that, I'm just going to set idle. This might be done for the day. Like I said before, common behavior in non-farm payrolls is wedging and whipping and congestion, so we might be seeing that. It is 10:02 Eastern. Okay, fellow traders, is it 1:08 Eastern? The markets are wedged up and dead. What did we say prior to the non-farm payroll? We said this at 8:25, 8:30 a.m. Eastern, that 9 or 10 out of 12 non-farm payroll Fridays in any calendar year are just dead, wedged up, sideways affairs in the pit session. 2 or 3 on average overall are directional and trendy or oscillating. This was not one. And so I'm going to leave it right where I stopped this morning at 56 ticks per each single TF contract, not per 3 contracts or not anything like that. We're just talking about one at a time, and there you go. Wrapped up and done for this week, and I'm wrapped up and done with these demonstration videos for the remainder of 2014, if not much further. Like I said before, there really isn't anything more to demonstrate. It's just the same thing day after day. Follow the filter charts, execute off the trigger charts, cut losses short, let gains run long enough to make positive things happen and be done. I've had a fortunate stretch of positive performance here the past couple of weeks. It's not going to last forever. There's some red days coming. They'll be there, especially if I don't do my job to its utmost every single day. I have to come in and pay attention to the basics. Sit, watch, and wait for conditions to be in my favor. Cut losses short. Resist the temptation to pull stops and all of that, nonsense. And then when I find myself in a small to moderate hole, be aggressive on taking gains to get back to zero or slightly above, because the next trade's coming along soon enough. And if we don't go backwards much, going forwards is far easier than that. Hope this helps. Looking forward to working with those of you inside the live program. And as always, best trading wishes.